Okay, boys and girls, we're back, and today we're talking about the Nifty 50. So here's the deal. About a couple days ago, I sent out an email to all my followers asking them exactly what they would like me to teach them. And as it turned out, there were a very wide variety of responses, but there was one response from about 20 different people that I had never heard of the stock before. In this case, it was the Nifty 50, and as it turns out, it is not even a stock at all. So I went into digging into the data, into the numbers, and I have found out the perfect time of the year to buy the Nifty 50, which, as we will all know in about 20 seconds time, is the equity index in the Indian stock exchange. And not only will I show you the perfect time of the year to do it, I'll also show you how to take advantage of it if you are a US based trader as well. So let's dive right in. So what's the Nifty 50? Well, the Nifty 50 is the S&P 500 for India, meaning it is a benchmark broad-based stock market index for the Indian equity market. It's comprised of 50 stocks, shocker, in 12 different sectors, and is one of the two main indices used in India, and the other is something known as the BSE Sensex. So like I kind of mentioned before, since I knew close to nothing about the Nifty 50, again, I had never heard of it before, but some of my followers were interested in learning more about it, I decided to create this video. So what I do in situations where I know nothing at all about the stock, well, I look into the data, and what we found out was, well, first of all, this is from 1996 to present, so 20-something years depending on when you're watching this video. And this is the seasonal chart of the Nifty 50, which again is the Indian Equity Index. And again, don't worry if you don't live in India. I'm going to show you exactly how you could take advantage of this even if you don't live in India. So here's the deal. What is a seasonal chart very quickly? Well, a seasonal chart takes all of the January 1st and charts it, all of the January 2nd and charts it, January 3rd, 4th, all the way up to December 31st. And this way you get to see if there's some sort of a seasonal pattern. And what we do is we kind of take it a step further. And we take that seasonal pattern and then we detrend it. If we start to chart at 100 and end the chart right around 100, that will give us a better visual representation of where some of the ebbs and flows might be. And as you can see, it turns out from the right-hand side of the screen, where this line kind of is to the right, and this line is November 22nd, all the way to the left-hand side of the screen for this side over, which is January 4th. So as we can see, when we break down the seasonal chart for the Nifty 50, and again, do not worry if you are not an Indian-based trader or investor, I'm going to show you how you can take advantage of it without having to be that. So as we can see, we take it down to the seasonal level, and then we detrend it, to be able to really visualize where the ebbs and flows and profitability times are. We can see very, very clearly from November 22nd, which again is at the right-hand side of the screen, all the way to January 4th, which is at the left-hand side of the screen, is ultra profitable. Now, if we took those dates over the last 20-something years, again, from 1996 to present, from November 22nd to January 4th, you can see we've had a very, very consistent profit over that time. Now, in this time from 1996 to present, in U.S. equity markets, for example, or in world markets, we did have the dot-com bust. Then we did have the sell-off in 2008 and 2009. As you can see right here, proof is in the pudding that none of those happened. Remember, again, that dot-com bust happened over here. We saw no sell-off whatsoever during this period in the Nifty 50. And the financial crisis of 2008 and 2009, we saw no sell-off during this period. So very, very consistently profitable. And if you started with $100, you would have made about 4.5 times your money just owning the Nifty 50 during this period. And here's how the numbers actually break down. During that time, which as you can see is only 43 calendar days, we had a win rate from 1996 till present of about 86.96% for an annualized return of 74.42%. Clearly better than the average index. We had an average return per year of 6.76%. We had 20 winners, 3 losers, a max profit of 26.63%, and a max loss of only down 1.78%. So as you can see, how do we get the consistency that we see here? Well, we have a lot of winners and we have a lot of big winners and we have very few losers and a lot of small losers. And again, what you're seeing right here, remember again, that dot-com bust was supposed to happen right around here, but it doesn't happen in this study. And the financial crisis of 2008-2009 was supposed to happen here and it did not. So how do we take away from this? Well, first of all, here's the deal. In the Nifty 50, it does appear that the end of the year, and specifically the dates between November 22nd and January 4th, is a very profitable period. And again, not only was it profitable in the dot-com bust of the year 2000-2001, not only did it not lose any money in 2008-2009, but it was also profitable last year in 2018 when the United States equity markets lost about 5 or 6%. So again, over that 23-24 year period, depending on when you're watching this video, 86.96% win rate, pretty good with an average return of 6.76%. Now, if you don't live in India, you can still take advantage of it. There is an iShares ETF for the Nifty 50, which is symbol INDY. So if you are not an Indian-based trader, no harm, no foul, you can still take advantage of the fact that in the ETF, iShares INDY is the symbol. You can still take advantage of the fact that over the last 24 years, since 1996, the Nifty 50 was profitable 86.96% of the time from November 22nd to January 4th with an average return of 6.76%. So now that we have this ETF here in the States, INDY, there's no excuse why you cannot take advantage of this. I'll see you all in the next video.